Hello and welcome to our briefing where we're going to be talking about mule and scam detection and how these two problems are deeply interconnected. We'll be getting insights from our experts into how money mules are playing out for financial institutions right now. We'll be also talking about detection strategies on shifting mule detection to real time and importantly, talking about why this shift is so crucial for any FI who is really serious about tackling scams. So I'm pleased to introduce our panelists today. We've got a great selection of speakers to tackle this very important topic. Nicola, could I ask you to introduce yourself first, please?
Thank you, Lizzie. My name is Dr. Nicola Harding. I'm a criminologist and I've worked specifically looking at mules and scams for probably the past 5 or 6 years, maybe a little bit longer, working on various research and projects to try and intervene with mule and scam behaviour.
Thank you. It's great to have you, Nicola. And Sarah, likewise, love to get a quick introduction, please.
I'm Sarah Gilb. I'm a fraud program leader for authentication risk at Fifth Third Bank. I manage our digital and IVR fraud operations detection.
Great. Welcome. Thank you for joining us. And Ollie, hi.
Hi, Lizzie. Nice to meet everybody. Oliver Ludlow, one of the advisory consultants at Outseer. I'm one of the subject matter experts when it comes to mule account detection.
And so we're really blessed to have a very interesting range of views to tackle this for this session. So thanks for joining us. And if you have any questions for our speakers, we will be endeavouring to answer them as we go along. Please use the Q&A function or head to the chat function to introduce yourself, drop any comments that the whole audience can see. We'd love to hear from you as we go along. So the way that we see the threat landscape and how it's transformed over the last few years here at Outseer is through this lens that we have traditional attacks that live in this technical attack surface. We're talking people using stolen or synthetic credentials, hacking into known accounts, carrying out unauthorized and fraudulent transactions. Whereas the last few years, we know that we're dealing with this explosion of scams. And this is really attacks that live in this right side of emotional attack surface, where attackers are trying to target your customers directly and tricking them into authorizing their own losses. And when you look at mules, it's really interesting how they span both areas of this compound attack surface, as you've got complicit mules that know exactly what they're doing, and then this other category around unwitting mules who are potentially tricked into carrying out transactions that they should not be doing. Oliver, can you please dig into us a little bit more into these different category of mules and why this is so important when it comes to mule detection?
Thank you, Lizzie. So yeah, when we look at what different types of money mules, as per the FBI description, and in terms of what we see across the industry, there are three main types of mule accounts that operate. The first ones we'll look at normally kind of prey on the emotional attacks. So your unwitting type of mules. These are your victims. So the type of scenarios we would see in this area would be things such as job scams, people being offered, say, high salaries, a good join-on bonus. But in terms of having that, there's a trade-off of them doing something on behalf of the fraudster. We then see other things such as romance scams, where people are building trust up online and then asked to make payments into an account. They are unwitting. They have no idea they're part of a bigger fraud ecosystem. Then in the middle, we have witting. These are people that actively take part and knowing they are doing unusual behavior or doing things they shouldn't be doing. They could be doing things such as selling their accounts, get rich schemes, students passing on those accounts to a fraudster to then operate and transfer money through that account. The third one is then complicit. So these accounts have been opened deliberately by fraudsters to achieve one thing, and that's money muling through the bank ecosystem. The importance of knowing the three different types of mules is when we look at that from more of a detection capability. Each one of these options here, or each one of these three examples, have a different behavior. They have different devices, they have different intelligence that we can look at from a detection capability. So that's an overview of what type of mules we see. If we move to the next part, we'll go into kind of what we're seeing from a regulatory perspective. So there are certain regions that are leading into regulation very quickly. And this is again to try and address the common challenge that we're seeing within the ecosystem. The UK PSR, so in terms of payment service regulation, we've seen that 50-50 responsibility from a bank who's sending the money, but also receiving the money. There's also timescales to investigate that from a legislation standpoint. So we see some countries moving forward. There's other ones such as Singapore. We know Australia, they're also leaning into regulation. So we're expecting this kind of expand into other regions. But at the same time, everybody in non-regulated regions still understand the impact mules have when it comes to stopping that from an operational loss, but also a financial loss.
Yeah, there's a lot of important reasons which we'll dig into about why to address this for regulatory reasons and non. Nicola, talking about key trends when it comes to money mules, could you give us a bit more insight into why mules are so important when it comes to tackling fraud and scams?
Yeah, so I think we think that mules are somewhat of a new phenomena, and they aren't necessarily. There's been different ways that money has been transferred using other people's accounts for a really long time. The significance of right now is its recent history. So fraud growth stagnated around 2016 to 2018. There was a little bit of a bottleneck. So we saw that the cadence of fraud and scams was increasing, but quite abruptly, really, we didn't see, it wasn't following that same trajectory of growth. And it wasn't because scams weren't working, it was because the cash out layer couldn't keep pace. So criminals needed to really think, okay, actually, it's getting more difficult. There's greater KYC involved, there's less ability to for bribery and corruption or these types of things. So ways that they would have got around it traditionally, technology was designing out, and greater regulation and greater awareness in financial institutions, it was working. The reason why then the mules kind of exploded is that they became a solution to this problem for criminals. So money mule recruitment essentially solved this bottleneck, and pre-COVID it then scaled up. Post-COVID, where people moved more to online, we saw a move from recruitment of money mules from in person or within those kind of criminal networks to online. And it exploded, and it hasn't slowed since, really. So, like I said, it's not new. Check mules existed, for example, but the scale and integration with scam pipelines is qualitatively different nowadays. Money laundering sits at the bottom of it all, but romance fraud, investment scams, illegal money lending, they all need this exit layer. Mm-hmm. So think about money mule recruitment solves the bottleneck, but mule recruitment is the logistical infrastructure of fraud. The scam is the acquisition and the mule is the exit, and you can't scale one without another. A key thing to consider really is, like, why are mules so financially viable for criminals? And we need to consider, when we think about the witting and the unwitting, is that the return rate that criminals want is much lower than we would potentially expect. So the research suggests around 30% recovery of laundered funds is considered a good outcome. So criminals can lose up to 70 pence in a pound and still profit well from what they're doing. And that works really nicely with money mule recruitment.
Mm-hmm. That's a very interesting stat. Goes to show that they're making enough money that they can lose 70% of it and carry on. Sarah, what trends are you seeing around scams and mule activity at the moment?
Yeah, I totally agree with you, Nicola. Scams that evolve into money mule activity have increased in popularity in recent years with advancements in options like social engineering, increased use of AI. Fraudsters groom their victims through things like social media, dating apps, and often find vulnerable people of all ages in financial portfolios. So, for example, a recent trend was framed around convincing people to open fake businesses. Once they were opened, they Victims were instructed to open bank accounts where they would receive fraudulent funds and payment methods like ACH and wire. In this trend, fraudsters found victims via dating apps and guided them through the entire process. So they were very involved. Victims were given ideas for business names, a guide to understanding the business purpose, and they were given a business plan tailored to the bank that they were required to open the account at. The fraudsters coached the victims on what to say to the bank at account opening, how to explain the documents at account opening, and most importantly, how to explain the funds deposit. So what was it for? What did they need to do with it? And a lot of this coaching was done via Zoom meetings fraudsters held weekly. Romance, investment, crypto continue to be high on the list, like Nicola was mentioning, of scams that merge into money mules. Fraudsters deceive victims into moving funds from bank to bank with the end result as crypto. And they're doing this with the stories of ludicrous investment opportunities that people fall right into. I think scams and money mules have always been around, and as a matter of fact, so is AI. AI is not new either. AI has been around for variations for years. However, the growing capabilities of agentic and generative AI and the ease of funds transfer with the mentality and motivation to get the funds to its end goal is really elevated the scam and money mule ecosystem.
It's a bit of a perfect storm of it's easier to carry out, the incentive is higher.
Yep.
Yeah, interesting. And Ollie, how are you seeing this play out across the global customer base that Outseer deal with, and different banks' attitudes on tackling money mules?
Yeah, it's an interesting question, Lizzie. I think one of the things that is aligned is this is a universal problem, whether you are governed by regulation to do something or whether this is something that in region that a bank is seeing and needs to kind of move towards. So everyone's aware of the challenge of mules. The approach is, again, is looking at not just point solutions. Deploying one technology cannot stop mules. It's looking at different points of data, bringing them together, whether that's from a model perspective, and moving away from what we've seen in the past of having static rules and having rules rely on stopping mule activity. Rules are good, obviously, from a business perspective to set thresholds around what a bank may want to send out from a limit perspective. But what fraudsters understand are those limits and thresholds. They will test them. Once they find the thresholds to transfers, for example, they can exploit them. Once they're exploited, it takes a lot of time to then find another rule. So it's this constant kind of whack-a-mole game. That's where we're seeing this shift away from static rules to more model-driven. Obviously, rules can still control the model, but that manually automatically adjust based on the data that we see.
Yeah, interesting. And we'll definitely be going into more depth on the detection strategies that banks can look at. Nicola, I know you do some very in-depth work to understand mule activity. What can you tell us about mule recruitment and how that is working at the moment?
Yeah, so all criminals are doing a cost-benefit of analysis. You've got to remember that mules are the human factor, and humans are very unpredictable, not just for us, but for criminals as well. So they'll be thinking, how much can they trust this person, because they're going to hand over their money, well, the money that they've earned through criminal means. How long will the account last? What's their return going to be? And because of that, there's somewhat of a two-tier model. So if you think there's like low level, this is quick wins, use existing accounts, they burn fast because it's unusual behavior, but there's higher volume of them, lower amounts, often earning less than minimum wage when time's factored into this whole process. And then there's high level, and that's longer term grooming, building genuine trust, getting victims to set up businesses, as Sarah highlighted, handing over full account access. These are patient operators with skilled social engineering, with weeks or months of investment, and higher amounts of money will go through those, as well as potentially, multiple transactions. What's key to note really is that not all criminals can do the long con. That skill set isn't something that's universal. Low-level operators will know their limits and they'll go for volume. So it's not to say that there's one type of criminal that will only go for the low level and one that will go for the high. It's that some criminals just can't go for the high. They haven't got the skill set. But we will see a mixture amongst any criminal group. And the isolation tactics for the individual, for the money mule for themselves, they're deliberate psychological architecture. They're not coincidental. Don't talk to anyone, don't go on your phone, this is between us. They're all designed to remove the reality check that would stop someone walking into money mule behavior. So most people are socially engineered. When they are socially engineered, they tend to know that something is off. All the money mules I've ever spoken to have kind of gone, I thought it might be a bit dodgy, but is it really? The problem is that they can't see the harm clearly. They need the money, and no one has really ever explained to them what money mule activity is or what it means. So because they can't see the harm, they don't realise. And the online to in-person escalation happens fast. That even those that I've seen that are recruited online often have some sort of human contact. I think that can be online, the Zoom calls that Sarah mentioned, but also trying to get to them quite quickly, physically in person. So the witting and unwitting distinction is a bit of a spectrum, not really a binary way of sorting. From genuine victim to fully knowing participant, it's not really that simple. But what is true of all of that is that the criminal is always doing this cost-benefit analysis, and we need to understand that calculation more and how we can disrupt that to be in a better place to disrupt money mule activity.
Yeah, I think that's a good approach. Because Sarah, you talked about a really interesting example of more like the long con, and a very in-depth scam that you saw people fall for. What other characteristics have you observed on the witting versus unwitting mule activity?
I think unwitting, these start as scams, right? Unwitting mules tend to be more emotionally vulnerable. They're easier to manipulate as fraudsters begin to build trust. They're often groomed over time, and they truly believe in the legitimacy of their relationship. Sometimes it doesn't take a whole lot of time to get them to that trust point. Sometimes it can be very quick, depending on the emotional state that they're in. Um, and they generally don't question what's being asked of them because the trust is there. They're all in. Whereas witting, these are generally, like Ollie mentioned, more aware of what they're doing is wrong. Maybe not the full extent of like how it relates to criminal activity or the implications of their actions, but they are very well aware of what's going on. They sell account access or credentials. They rent their accounts to fraudsters as they believe it's worth the payout. They need the money. But they also may open the account with the purpose of committing fraud. So this is often done at financial institutions. That is not their primary bank because they don't want to interfere. They know something's wrong, but they don't necessarily want to interfere with any established account that they have. And so they go to a new financial institution strictly with that purpose. But I think the biggest commonality is the motivation of financial gain with witting.
Yeah. And I understand that when the part of the human investigation process involves actually speaking to customers who've been caught up in this. What insights do you gain from those conversations, Sarah?
So when a mule is suspected, the investigation looks at the victim holistically, meaning we want to understand who the victim was prior to the activity. We want to understand how they may have fallen into the activity, how they could have connected with the bad actor, what vulnerabilities and characteristics were present that made them more susceptible to fall victim to this. We look at transactional data because we want to understand the bad actor and gain insight into the type of money movement they're facilitating. This helps us identify what type of scam is being conducted and any intentions they have to move the money from bank to bank. But I think the biggest and the best piece of the investigation to understand the life cycle of fraud is the conversation with the victim. So Conversations provide details about the interaction between the victim and the bad actor that are not always visible in the data and not maybe so the initial research. These conversations play a key part in identifying trends and insight to staying on top of them, as well as continued pattern linkage to prevent future mule fraud. Um, One of the key values and benefits to speaking with the victim is the ability to come full circle to understand the interaction flow, the subsequent fraud, the money movement activity, and most importantly, how fraudsters operate and how they keep evolving.
And I think to add to that point, Sarah, the interesting point from, I guess, a model perspective, it gives you two parts. You've got the insights in terms of when you're investigating those cases, in terms of what have we seen, that we can provide kind of that. We know the behavior matches, so we know this is likely to be the owner of the account that's done this, versus we know based on the behavior this wasn't the account owner. But then you've also got the feedback. So based on that conversation you're having with the customer, bring that feedback back in to see, was this actually detected as a mule or were they not? And those different taggings that we provide.
Really agree.
And touching next a little bit on banks' responses. So we heard from Oliver around some of the regulatory drivers, but money mules can be seen as an AML issue. It's stopping money laundering, but we are seeing more and more fraud teams be proactive in this area to view it as a part of their fraud and scam prevention to prevent and stop money mules in the moment. Sarah, I'd love to hear from you a little bit more about the motivations that banks have to take proactive action in this area.
I think banks are motivated to take action for a lot of reasons. The benefit to early detection is the ability to implement prevention opportunities, strategies. We want to prevent future victims from the emotional and financial stress of caused by scams and mules. But we also want to stop bad funds from moving around the ecosystem, right? We don't want fraud or money laundered funds moving from bank to bank, rather, that eventually arrive at a place where funds are used to initiate or facilitate criminal activity. Another major motivator is forming obstacles that make banks less attractive to move funds through. If we can make the bad actors' life a little bit more difficult, they're forced to abandon their current practices. Of course, they will find new ones, but that just enhances the importance of fraud and AML detection. Why it's truly needed, especially the way that fraud is today.
Mm. Yeah, and that ties in with what you're saying about understanding financial motivations. The more difficult you make it, you actually up their costs to be able to carry out this activity. Are there any key challenges that banks face in tackling this, dealing with mule networks and also scam transactions?
I think some of the biggest challenges come from regulatory constraints where there may be limited ability to hold funds for a certain period of time. There's also a bank to bank coordination effort that could be stalled based on differing policies where banks might not communicate effectively because they're competitors. There's just a few gaps in the process, but like as awareness around scams and mule grow, the likelihood, at least in my opinion, of working together to combat the fraud on a larger scale seems more feasible. But I also think as fraud has evolved, bad actors they've moved to using their victim to commit fraud. So models in the past that greatly detected account takeover now need to be advanced in detecting customer initiated activity where all the signals point to the real customer. So it doesn't look as suspicious. And you really have to have a trained eye and an investigative mind and an understanding of fraud to be able to detect that.
Yeah. Ollie, any comments on that?
Yeah, I think it's a really interesting point that, but back to what I said earlier, banks know they need to respond and come up with a strategy to help with mule accounts. It's growing. We know customers are easy victims to reach out to when it comes from a fraud's perspective. Um, And that's where we see kind of this reference back to when we was at the United Nations last week around the sharing of data. That's also kind of a message internally within banks, bringing more data through when it comes to a risk assessment perspective, whether that's on the account creation side or other data that we see on that users when interacting with the bank. So yeah, definitely a shift around data sharing as well.
Yeah, I think data sharing is one of those topics that everybody would love to do it. There's different appetites and different barriers as well. But we all know how important it could be to really tackle this. I'm sure the criminals are sharing data all the time, right, Nicola?
Yeah, definitely. I would agree. One of the key things I think with criminals is that we have, we want to get from A to B, and we have to navigate red tape, bureaucracy, laws, regulations, and various committees and different things. When a criminal wants to achieve what they want to achieve, they go from A to B with, and it doesn't matter the devastation that's left in between. Unfortunately, what's tending to happen is that money mules become that vehicle.
Mm-hmm. Yeah, there can be this inherent imbalance in the ability of the attackers to innovate, share data, share information, test and iterate, versus the protection on the banks can be a lot more complicated. It's complicated systems, it's regulatory consideration. So you're not always playing fair. But with lots of talented people in the industry trying to tackle this. Ollie, could you talk us through in a bit more detail around the detection piece, how you advise the customers you deal with to really address the mule detection in real time, and the signals and parts of the customer journey that are important in this?
Sure. So in terms of when we look at mule detection, it kind of goes back to what we was discussing earlier, is looking across the whole life cycle. And this is where I refer to it as journey-aware intelligence. When a customer interacts or first has an account with you, that's the first part of data we're collecting. So what devices have they used? What are we familiar with from a behavior perspective? Then over time, we start building that. So we look at things from a login perspective. We start to look at funds coming in and funds going out. And that builds us a pattern on two separate parts. From a device perspective, what devices are known within, say, my profile? They also got the user kind of behavior as well. So do I log in after I've been paid? I've got bills that I need to pay, and do we see certain traits or behaviors from that perspective? When it comes to Mule account, it's really important that we look at all of these different attributes, and this is where the journey-aware intelligence comes in, especially when we look at it from different types of Mule accounts that we see, from an unwitting to a witting, and that again helps later on down the chain when investigating. When building this, we look at kind of different data elements. So first one on here is obviously device and location. Does that device and location change over time from a behavior or an ownership of that? That might be normal. I may use my account at home, but then I may travel to a work location and use the device in two different places. But what we start to see is the unusual patterns. So these might be my two normal locations. All of a sudden, I've logged in from a completely different place. That again may be normal, but then that's where the other data elements come into play. With the behavior biometrics, is this me? Is this Oliver logging into the account? Or is this Oliver and his behavior's changed? So this could be a sign that I'm being socially engineered. And you bring in other, say, attributes such as, am I on a phone call as well? You also may have that this behavior doesn't match. So if you've got a new location, the behavior doesn't match, we're already on that path of this looking to be a bit of a suspicious transaction. Then you start bringing in your digital banking activity. So my login, my account management, and also say from a payment perspective. What does my login behavior look like? What does my interaction patterns look like between the different previous profiles that are built and where I am now? Then you look at your payment patterns. So your balance ratio, your inbound, your outbound. And then you bring in things that refer to as transaction network. So do we know if this device or this account has mule activity related to it? And this goes around the data sharing, have a consortium to bring that together. So all of those 5 different patterns, they're really important. And also bringing that in across the journey. Where it gets more challenging is applying that from a model perspective. This is where we kind of discuss moving away from rules. Having rules on each of these 5 different attributes is great, but you're only looking at one specific thing and they're not adapting based on what we see from a behavior perspective. So what we've looked at is how do we take all of those data elements and put it into a model? That model then will look at outputting a score. The higher the score, the higher the confidence that we're looking at this from a mule perspective. Not only is it looking at it from a score perspective, but going back to the point earlier around investigating and speaking to somebody, what data do we have that can confirm some kind of intelligence prior to having that investigation? Do we know that the behavior matches? So we know this was the account holder, or the person we're speaking to, we know it wasn't them logging into the account. Have we seen other unusual activity, such as the money transfer movement, a new device login, a new location? They provide us indicators. So in investigating that in front of, say, a person who may be a victim, we're able to say, provide more insights. Then that kind of feeds into your outcome perspective. So your fraud alerts, if you want to allow, if you want to challenge, whether you want to freeze that, and having that back within real time. That's the whole point of the model. It's learning over time based on what we're seeing, not just within the bank, but also from a global perspective. We've seen some examples from an outside perspective of working with some of our customers that from a detection perspective, we're detecting 82% from a mule detection rate, which is really high in terms of market standards. That provides efficiency increases. So we've seen a reduction in investigation times when looking into this. That goes back to the exposure of data from the model perspective. So that's what we look at when we talk about the different data elements, when we look at the different type of mule accounts we're trying to address, and the value of having that within a model and providing that back in real time to the customers, but also the banks as well.
And you touch on the topic of confidence, Oliver. Could you talk to us a little bit more about why it's so important that that confidence does build before banks act on this, what the negative consequences are of potentially being a bit overzealous on mule detection? What are some of the considerations that people need to juggle when it does come to building that confidence and acting with precision?
Yeah. So precision's a really good word, and it goes back to how fraud's always been looked at, this perfect balance between user experience, but also fraud as well. We don't want to apply unnecessary friction to customers. We don't want to be having them go through a difficult journey when trying to do a normal transfer they do month in, month out. What normally happens when we do that, we see that customer move away. And that's a huge loss from a banking perspective. So that's where the friction comes in. At the same time, you don't want to bring in operational burden to the bank, a whole new process, a whole new workflow. That's the core about looking at it from a solution and model perspective. Taking the existing data that lives within the ecosystem today and putting it through existing channels that the bank are familiar with is one way to accelerate that from an adoption perspective. That way you're managing the risk from a customer perspective, but you're also enhancing what the bank use today from existing data and existing policy perspective.
Thanks for taking us through that. And Nicola, do you have any closing thoughts for banks, based on your advice that you give to banks dealing with this issue, on, from your deep understanding of how the money mules are operating, what would your closing thoughts and bits of advice be to the audience?
Yeah, I think it's probably my overarching advice is just never making any assumptions. There's a lot talked about in money mule activity that criminals will act this way and act that way, and if we can just design those things out, everything that you've just described is a really good kind of layered, holistic approach to preventing mule activity, and that's really what's needed. We need better education as well for for our customers and young people who are going to be future customers around this issue, because I think a lot of people don't really know what they're letting themselves in for, and that's one of the things that really probably isn't necessarily in the remit of the financial institution. You guys are just dealing with the fallout of that not being there. So I think proactive measures, but that should be in the national curriculum and things that we teach our children, rather than putting more pressure on financial institutions. But the assumptions that we make, we make assumptions about criminals and they make assumptions about us as well. One of the things that Sarah and I think discussed last time was about this, account tenure trap, and that criminals still age accounts to 3 to 6 months thinking that it's going to be protective. They will do things because they've learned patterns once, or someone somewhere learned off a financial institution that if they just left it 6 months, it was less likely going to get closed down than if they did it within 6 weeks, right? That's not really the case anymore. Those simplistic rules aren't the things that are protecting us against, money mule activity or financial crime. But in their minds, those old rules haven't been updated, and they become myths and legends amongst criminal activity as well. So they're still gaming rules that no longer exist. And what we need to do is take the predictability out of our financial services for criminals so that they're still guessing. Because the more that they can be sure about our processes, then actually they can figure out ways to get around them. So anything that's dynamic and works really kind of bespokely to the individual customer and to the individual financial institution, and doesn't reflect back to the criminal when they're doing their kind of trial and error, that this process is in place or these rules are here, we'll just go around the rules and then we'll be better. Anything that you can do to create that is a huge step in the right direction.
Yeah, Oliver, that fits in with what you were saying earlier, right, around rules having evolved, and it's a much more dynamic approach required to properly tackle this.
Yeah, fraudsters are clever. They have time on their hands. They can sit there and test different scenarios, and they will do that. And to Nicola's point, as soon as they find that, they'll go and exploit it. So you have something that's constantly changing. That yes, they may try and do a high value transfer with somebody's account. Yes, we recognize it, and that transfer goes through. Doesn't mean that if they leave a dormant account for 3 months and try and do the same thing, they're going to get the same outcome. And that's the challenge here, is moving away from static rules, bring in new data elements that exist today, put that through a model that can consistently adapt based on that unique scenario. And that's what improves your customer experience. We're judging things at a transaction. We're stopping at the point of the funds being lost, only based on previous activity, not just what we're seeing then. We're looking at the history of that transaction and account holder.
Yeah, and taking that action at that all important point where the funds are about to leave the bank and about to move. And Sarah, any final thoughts from you on other, based on your experience dealing with this and speaking to people who've been caught up in this? Any final thoughts?
Yeah, I think again, staying proactive, staying ahead of fraudsters and trying to understand how they think. A lot of that comes through education. I think it's really important that customers are educated, but I think it's equally important that bank employees are educated, financial institution, anybody that could fall victim to this, or maybe manage a victim account in some way, shape, or form. The financial institution employees need to be just as educated, and we need to make it a point to educate customers. And I think that's really one of the best ways to try to combat it in real time, and then prevent the future fraud. But I think it's a never-ending learning cycle. You have to, just because this type of trend was happening today doesn't mean that same trend is going to be happening tomorrow, because now we're in the way of the fraudsters. They need to pivot. So you have to be proactive. You have to be willing to stay on top of trends and understand them and want to learn about them. Use resources, find resources out there. What are people saying? What do we need to be looking out for? I think it's just a matter of you really have to stay proactive and diligent. with the customer and victims on your mind at all times.
Yeah, and then so just to close, thank you so much for that excellent advice. If you'd like to learn more, we do have a couple of additional resources. We can put links in the chat, or feel free to reach out if you're a current Outseer customer. Reach out to your account manager, and we'll happily chat you through any next steps and talk to you about this topic in depth. So with that, I'd like to thank our panelists for joining today. We do really appreciate your time. And also thanks to the audience. We know how busy our calendars get, so I appreciate taking time out of your day to tune in. So with that, thank you and goodbye.
Thank you.